Before a pin bar becomes a pin bar, it will look like this, very bullish. When you are watching this candle developing on your charts, you may have an urge to take a trade. Your greed tells you to enter because you'll miss a future price move, and you're not alone in feeling this urge to enter. When reactive traders see candles like this one, they feel the urge to take a position in the direction of the candle they're seeing. And when the pin bar is completed, your fear takes over. If you entered when this candle looked bullish, by now you would start to feel a little bit under pressure in regards to what the market may do next. Your trade has gone from being at a profit to being at a loss. And if the market goes down any lower, you will start to consider whether it's a good idea staying in the trade. Again, fear and greed. I always think like this when I'm considering a trade. If you didn't already know, there are different types of pin bars which appear in the market. When I say types, I don't mean one pin bar has a bigger wick than the other. I mean the causes behind why a pin bar forms in the market can be different depending on where the pin bar is found. There are two main causes. When a pin bar appears, a big player took a significant amount of profits of their existing trades, or they're starting to place trades in order to make the market reverse. And the best types of pin bar setups form when there has been a sustained move, either up or down, and price retraces to an area of value or interest. At its core, a pin bar is considered a reversal candlestick. But if you try to trade pin bars as reversal signals when the price is moving in the direction of the trend, then you are not doing it correctly. So to avoid the situation, you'll use two exponential moving averages, one with a period of 50 and the second one with a period of 100. These are very common and followed by many other traders. If the 50 EMA is above the 100 EMA, then the market is in an uptrend. If the 50 EMA is below the 100 EMA, then the market is in a downtrend. Our strategy involves trading pullbacks in the direction of the two EMAs using high volume pin bars. When markets trend, they don't just go up or down in a straight line. There's always a period of rest before continuing the trend. Markets always have these pullbacks when trending, and these are great opportunities for you to get into a trade before the market resumes its trend. The area between the two EMAs is the sweet spot for our entries. You want to find high volume pin bars in the direction of the main trend, rejecting these levels. The volume of the pin bar must be higher than the previous three bars. So what makes a tradable pin bar? I mainly look for several points. The wick or tail should be at least 2 times, ideally 3 times, the length of the body. The body should be present towards either the upper or lower extreme of the pin bar. The wick should stand out when compared to surrounding bars. Generally, pin bar signals are only relevant for the next 4 or 5 bars. So if you watch the daily time frame and a pin bar forms, it will make most of its impact on future price moves within 4 or 5 days of its creation. This is because pin bars are short duration setups, and because of this, it makes sense that they will normally only affect the outcome of the bars immediately in the future. Pin bars should not be traded on their own. There are many factors that influence whether or not you should trade a pin bar, and for that reason, you shouldn't take a trade solely based on the fact that a pin bar has formed. This is why we'll use the EMAs for trend direction and volume to spot interest and active participation in a future price move. Also, pin bars that are in heavy traffic or choppy range-bound markets should not be traded The reason for this is that there is no clear trend and there are too many areas of interest for price to stall at. So pin bars should only be traded when they form in areas of value or interest. The more of these areas of interest that converge together near where the pin bar has formed, the more significant the pin bar signal becomes. This is known as confluence. You can use support and resistance levels, supply and demand areas, but in this video, we'll focus on EMAs. As well as being used to evaluate the trend direction and strength, EMAs can be used as dynamic levels of support and resistance. In some cases, price can be seen to bounce off certain EMAs almost religiously during retraces in trending markets. And when volume confirms the pin bar, you have several factors which increase the probability of a successful trade. The only problem with EMAs is that everybody uses different period values, depending on the time frame and the markets they are trading. My advice is to pick 2 periods and stick with them, as once you get some experience under your belt, you will start to learn how they behave in different market conditions. I prefer the 4-hour and the daily time frame, and I use the 50 and the 100 EMAs. But the choice is completely up to you. You can change the parameters as you wish. Just understand the concept and adapt it to your needs. We trade Amazon on the hourly time frame. One of the first things you should look for when you open a chart are the 2 EMAs to determine trend direction and to find possible areas of dynamic support or resistance. In this case, the trend is down, so we look to short the market. And this is our pin bar, showing rejection and indicating a potential trend continuation. The volume of the pin bar is higher than the previous candles, so there's active interest in the market. When the low of the pin bar is broken, that's our signal to initiate a sell position. Stop loss above the pin bar, and in this case, above the 2 EMAs, which is almost the perfect setup, with another layer of protection. Take profit at the next swing low in the price structure, a risk-to-reward ratio of around 2.8. Perfect trade, and we even left profits on the table. We move to pound yen on the 30-minute time frame. The 50 EMA is above the 100 EMA, so we look for buy opportunities. We have our pullback to the EMAs, and here's our pin bar. But look at the volume, it's lower than the previous 4 or 5 bars, so this is a no trade. The volume condition isn't met. This is unfortunate because the price indeed went up, but in the long run, the volume confirmation will save your account for many losing trades, so don't neglect it. Let's move to Euro-Yen, on my favorite time frame, the 4-hour. The same situation. The trend is up, because the 50 EMA is above the 100 EMA, so we look for long trades. We have a small pullback to the 50 EMA, and with this pin bar rejecting the area, volume is higher than the previous bars, so all conditions are met. When the high of the pin bar is broken, that's the signal to initiate a long position. Stop loss below the low of the pin bar and below the 50 EMA. As for take profit, the distance until the next swing high doesn't offer a positive risk-to-reward ratio, so we must estimate ourselves a potential target. I'll set a target of 3, but I'll monitor closely the price action at this resistance area. In order to be a valid tradable pattern, the pin bar must reject the area between the 2 EMAs. This is a key point in trading pin bars. In this case, again, we are dealing with a bullish trend, so we'll look for a continuation trade to the upside. This is the pin bar, rejecting the 50 EMA. Volume is higher than the previous candles, so this is a valid setup. Once we've identified the pin bar at the value area, we wait for the high of the candle to be broken. Stop loss below the low of the pin bar and below the 50 EMA. We are very close to the most recent high, so we aim for a risk-to-reward ratio of 2 or even 3. Let's continue. I see a somewhat deeper pullback to the 100 EMA and a pin bar forming right on top of it. The real body is relatively small and the tail of the candle is much longer. Volume is definitely higher than the previous bars, so there's active participation and interest in that particular area. So we'll enter long at the high of the pin bar. We have a gap up, so the entry price would be somewhat higher. Stop loss below the pin bar and below the 100 EMA. As for targets, I see this major resistance here, which could stop the price increase. So let's take our profit a few points below this area, a risk-to-reward ratio of around 2.5. Okay, that's frustrating. Price almost hit our take profit, but instead it reversed and stopped us out. But there's a lesson to be learned here. What could we have done to manage the trade better when in profit? As we entered below the 50 EMA, near the 100 EMA, in the future, when price goes up and consolidates above the 50 EMA, a safer money management technique is to move the stop loss to break even. We won't allow a profitable trade to become a losing one. Some traders will claim that the bigger the pin bar, the better. But my experience has shown that if the pin bar is much larger than the average trading range of the preceding bars, then it will most likely become a continuation pattern rather than a reversal one. When presented with a massive pin bar, like this one on Bitcoin, my advice is to stay on the sidelines and wait for a better opportunity to present itself. If you found value and learned something new, leave us a like. This way we'll know if you'd like to see more videos like this one. And check out our Academy program if you want to further level up your trading. Until next time.